everybody. Welcome to the Trading Market Technicals Morning Call video for Wednesday, September the 4th. Green across the board, Dow up 23, Nasdaq up 22, S&P up 680, Russell up 536. Now the Dow was actually up about 90 and right around the opening, but between 9:30 and 10, and most of the move was pretty much faded. Dow actually turned negative at one point before bouncing right around 3 o'clock into the close. So we did finish positive, but the big news is that we pretty much faded a lot of that move yesterday on lackluster volume. And that's really to be expected coming off of a long holiday weekend here in the U.S. Me personally, I'm not looking to trade anything like that when you don't have a lot of big players still out on vacation. Now, that's going to change, and things are starting to change now as we come into seasonal weakness here in September and some parts of October, actually, depending on what kind of weakness do we get. There are some interesting developments which I'm going to show you in the charts in a moment, but just keep in mind Friday is going to be non-farm payrolls, and usually that is a market mover and it kind of sets the trend for the month. So it'll be interesting to see what happens here. Now we also have the Syria conflict here that's still out in the cards, and Congress is voting, and they all voted on a strike on Syria. So let's see how that's going to happen. Obama had stated that it's going to be quick and fast. I don't see how anything like that could be just quick and fast. So what's going to be affected is obviously equities, gold, and oil, which we're going to cover as well. All right, so what I want to show you is I want to cover the metals, and I want to cover a couple of indicators. But let me show you this new low, and you can see markets really just contain here, and this is what you want to see if you are a bull and you think the market's going to go higher. Is this relatively low New York Stock Exchange 52-week lows? They're at its lows. So really, stocks are not making new lows at the moment, and we're sitting right here. But when you get this spike, that's when you can see a possible reversal in the marketplace, and you can see here. So anything over like 150, 100 is a word of caution. That the markets do start to accelerate to the downside because we have stocks that are starting to sell off and making new 52-week lows. That's how you want to really read this. But right now, it's pretty much contained. You get 25% that are making new lows, and that's normal in this market. So really, nothing much here. As far as a lot of the indicators, nothing really has changed in our indicators, so I'm not really going to get into it. I want to get to what is of importance. Here's the VIX, and as you can see here, VIX is pretty much have inside days, except of course on Friday when we had a little bit of selling going into the long weekend. We're sitting here between 16 and 17, so not much really to talk about. Although we are elevated and we are creating some sort of a base up at the upper end of the range here. So if something does were to transpire in the markets, we can actually see the VIX move much higher here, at least up to the 2021 area. So keep an eye on the VIX, guys. It's going to really be interesting to see what happens here in the coming days and the coming weeks, actually. Okay, now, so we talked about the new lows. We talked about the VIX. I want to take a look at a couple of currency pairs as well as the dollar. That's going to be a big key part of the analysis here. So let's take a look at one more thing before we do this. And here's the Vanguard All World Index, which produced a black candle here. And as you can see, we have some stiff overhead resistance here, 46.47. So we did bounce off the lows here, the June 24th lows, and now we're just kind of sitting around here. We do have support between the 50 and the 200-day moving average, but again, produced a black candle. That usually is a pause or a pullback sign. So we'll see how this develops here. So we're at resistance here in the All World Index as well. Okay, so now let's run into let's take a look at the dollar here. And the reason why I want to show this because this is a big part of the analysis, what I do. Now we had mentioned that the dollar should hold this area, which it did. So it actually did what it was supposed to do in the technical analysis. Now I said if it takes out 82, this could be a real breakout, and I do think it is a real breakout. Now, obviously, with what goes on in Syria, could affect and play out, trump the charts actually, in any analysis that you do. So you just have to be aware of that. But I do see the dollar here really starting to muster a little bit of steam to the upside. Now, one day doesn't make a trend. As you can see here, the dollar pushed up real hard and then came down. So we have this big topping tail, which is bearish for the dollar. But if it can hold here and hold steady within this area, 82, 82.50, I think the dollar will take its next leg higher, producing enough energy to pop this area and go higher. Now, if that happens, you're going to see the currency markets move. You're going to see equities and commodities start to move again, and that's what we're looking for, right? So speaking about that, let's take a look at. I want to show you the dollar yen. Now, the dollar yen, and this is a great gauge to look at of what the dollar is doing. Now, you could see here that the dollar yen is just kind of sitting on its own. We're in a range, and we have been for most of these, for a lot of the majors. We've been range bound here, and I've showed these charts to you many times. Now, if you take confine a little bit better, you could see symmetrical triangle within the range starting to break out here. Now, usually what happens in a symmetrical triangle, that we'll have this pop and then a back test, which creates a higher low from this previous low. So this is what I want to see in the coming days. If we can pop a little higher and then hold this uptrend line and then break out, you're going to get a real decent breakout in the dollar, which would also coincide with the dollar yen. Now, if the dollar yen starts to move, you're going to have a lot of the dollar pairs start to move along with it. And I say with the dollar CAD, which is already at the upper end, this is the loonie, the Canadian dollar, the dollar versus the Canadian dollar. And as you can see here, we have been range bound. We are now starting to break out of this range. And as you can see, you could even call this a little bit of a bull flag. It's not as steep as I'd like it, but we are consolidating at the upper end of this range here. This is bullish. So this also adds fuel to the dollar analysis, that the dollar is in fact breaking out higher. Okay, and we could see here that a break above the 106 area will validate this breakout in the dollar loonie. Now, another reason why I like to look at is sentiment, and sentiment is really important here. And why? Because when you have retail crowds totally on one side, you want to be the contrarian. You want to be the opposite side of what the crowd is doing. And the crowd, what I mean, is retail, which is what they call dumb money on Wall Street. So if you're looking at the retail, you could see that retail being green and long and short, and this area here, the retail crowd has been so long the dollar yen. Now it's starting to break down again. So this is the retail crowd starting to sell the dollar yen, which you as a professional want to be looking to buy the dollar yen. So sentiment is shifting from the retail crowd. They are starting to sell their long position in the dollar yen. That's also going to add fuel to the fire as far as a dollar breakout. Okay, now let's take a look at a big pair that we always like to look at is the euro dollar. Now, when you have the dollar starting to base and starting to break out, you're going to see the euro dollar start to break down, right? Because it's inverse, right? So if you're long the dollar, you want to be short the euro dollar. And this is what I see what's happening. Now, what I'd like to see in the bigger picture, and let's get the chart that we always look at. Here's the dollar, here's the euro itself, the spot euro. And I like to see, we caught the 200-day moving average. I like to see a break back up into this zone underneath the 133.30, 133.40, with, of course, a stop way above the 140. So you figure about 100 pips. I'd like to see a short euro in this area. So this tells me that everything is starting to play out nicely in the currency markets, which the currency markets will begin to start to move again, because we've had really range-bound markets since March, and it's pretty shocking that usually currency markets are very active, and the majors have not been so active of late. So now I'm really watching to see what happens here. So the euro short is going to be a good trade up in this area here. Obviously, we don't want to be short into the 200-day moving average. We want to see some retracement, a retracement rally, and maybe even fill the gap would be ideal, actually. Okay, so now we covered the currency markets, and this is something that that's going to play out, which will affect obviously the metals. Now let's go into the metals. Now everybody follows gold, but gold also is influential with other metal markets such as copper, palladium, and platinum, right? So copper, let's take a look at copper. Now we have a little bit of a mixed bag here. Copper, which actually popped yesterday. As you can see, copper has been weak of late, and you could just see that by the charts. Higher low, lower high off this high, lower high off this high, and as you can see here, copper did rally yesterday. One day doesn't make a trend, but we did get a little bit of a pull, a little bit of a retracement rally. So we'll be interested to see if this has any legs. To me, I think it's just probably a one-day wonder. But if you look at now platinum. Platinum is also another area which we need to look at. Now, platinum also is sitting up at the upper end of this range here, and this also was green yesterday. Okay, so that's influential to the gold markets as well. Now, the real leader is going to be palladium. Now, palladium, a lot of people don't notice, but palladium does lead gold markets and the markets and the metals itself. Now, palladium is the main leader here, is breaking down. Okay, so we have a little bit of a mixed bag. So that's why I said, I'm not looking to short or get long gold. Now, we have the Syria conflict too as well. And, it could spark the fear trade again in gold and really start moving these metals. But I want to take a look at, with the palladium, you could see we're starting to break down here where we have copper and platinum really looks like they may be on its way higher. So we have a mixed bag in the metals. And if you look at, which I'm going to show you in a moment, gold, and you could see here, let me just move this out of the way, which would be the GLD. How do you play it? Well, gold, as we know, we like at the 416 area, 416-ish, in that area, if, of course, it produces a sell trigger, right? We don't want to just short because the price, it's there at price. We want to make sure that it reaches price and it fails and we start to roll over. Now, if gold were to pick up a little bit of steam here, then I think we could probably get into this area here, this little zone area, which would be real nice, 139, 140 area, because we do have a little bit of a thin zone that we can probably flush back up into this area and then fail. That 200-day will probably come in here. So 139, 140-ish area is where I'm going to be looking for a GLD short trade, okay? And that would put gold at around 416-ish. 416, 425, right up in there, give or take 10 points in the gold trade. So that's what I'm looking for. Now, again, this is just a watch list trade. I'm watching it to see if gold were to fail at these areas, and then I would initiate a short position in gold. Now, what about oil? And oil, here is the USO. Now, we had a reversal here. As you can see, we had a sell signal in the bullish percent ENER, but we had oil run up here in USO. I'd like to see the BPNER come back into the 50% area and fill this gap area and look to be a better buyer at the 36.5, 37 area. So I had a few emails stating, you think would be a good short to get short oil, excuse me, and I say no, because you have too much headline risk. You can short it with a tight stop if that's your trading style, but I would not be looking to short gold. I'd be looking, I don't know why I say it, oil. I would only be looking to buy pullbacks in oil. And oil, I think, is going to set up a big trade, and that could actually hinder as well, putting pressure on equities if gold really starts, oil again, sorry about that, oil really starts to take off again. So that's what I'm looking at with oil. Now, if you look at, let's move this out of the way, and you can see here's the USO longer term chart, and I have shown you this before. Here's the gap fill area. Now, we did break out higher, and we're just really filling this gap. We didn't quite do it yet, but we're starting to fill it now. And again, I'd like to see it get back into this consolidation range, which would catch the 50-day moving average, or even down to this area here, 36.5, 37, and then that would be a great trade long, because you could define your risk, which would be obviously below this little area of consolidation, 36.30, 36.25. However you feel confident in protecting your trade. All right, so it's easy to manage here. So I do like the oil trade, but I like it on pullbacks. Now let's take a look at emerging markets. Now, if we have metals starting to break down, and commodities, you're gonna have these emerging market plays really start to break down as well. Now, we did get a retracement rally here in the emerging markets. Now, I'm also looking for a nice short here. As you can see, here's the Fibonacci retracements from the high to the low, and I also did one here here, and I'm looking for some clusters, and I like this area here, which we have a 38%. We have a cluster between a 38 and 76% off the two highs. So this is a big area of resistance. I like the volume profiles here, and of course there's a little cluster area of price just kind of chopping around. And it coincides nicely with the 50-day moving average. So I do like that 39.30-ish area. I want to see if it gets up there. We did break the 38%, and we broke above the 20. So if it does get up there next couple of days, this could also be looking for a good short in the EEM. So that's what I'm waiting for, to see where price, what price does in these areas. Okay, now let's take a look at the spiders. As you can see here, we did get a little bit of a pop, but we took a lot of it back. We did close positive, but you can see momentum starting to wane here. Now, as you can see here, this has a MACD stochastic still rolling over, has not produced a buy signal. So momentum is very, very weak, and we have volume here starting to tick a little bit higher. But again, guys, it's just average volume. We want to see, if you really want to see some distribution, you want to get volume spikes like this area here. Okay, take a look at the 60-minute. Again, holding the first target at 1628. And again, if we do take out this area, you're going to see that 76% retracement and possibly 100% retracement off the June 24th low. Take a look at the 30-minute. As you can see, we're just chopping around here. So we do chop around again today, maybe even tomorrow. People are waiting now, starting to come back into work, and not gonna put any new positions or start altering any positions until non-farm payrolls come out. So that's going to be a big number, guys, in September. And we have the diamonds. Really, Dow is actually weakest of the five that we follow, and as you can see here, it just looks like another bear flag forming. So this bear flag doesn't look too pretty. So if we do break this low here, 147.30, I would expect a 200-day touch of the diamonds here, which would be the Dow Jones. Take a look at the transports. Now, oil is going to play a big role in the transports, which would play a big role in equities and obviously put pressure on equities. So just keep that in mind. If you see that we take this area out, we're going to come into a good area of support. So anywhere in here, and logical spot would be the 200-day test as well. So as you can see where the theme is, more than likely, I think this rally, this sell-off will probably be will probably end around the 200-day moving average. And that's going to need to hold. That'll be a critical area, because if it does not, look out below. And as you can see here, the 200-day moving average in the Russell coincides with the June 24th lows. And obviously, as long as it takes for the market to break down, the 200-day moving average will continue to travel up here. So it'll eventually will break. And I do think that this move lower, if we start to accelerate to the downside, it's going to be a logical area for a target, for the big target for this retracement lower. SMH, as you can see here, we had a big breakdown in our head and shoulders pattern, and of course we're starting to move now and back test this area. And as you can see with the SOX, we have the same typical setup. We did get a black candle. We stopped at the 20-day moving average. The 50's way up in here. So this, to me, tells me that this is continued weakness in this sector. So if you're looking for a short, look for the weakest semi and start to look to short it. And this, to me, looks really ugly. I don't like the chart at all, and I think that if we take out yesterday's low, you could at least see that 450 area again, if not lower, to the 200-day moving average. And it's the semiconductor index, okay, the SOX. Now, let's take a look at Goldman. Goldman here, I think I'm not looking to play retracement rallies here unless we get a real push lower, a lot of fear, and then I would look to play that for a real dead cat bounce. But this is holding nicely in this horizontal support area. But to me, I think it has a lot of work to do to break back higher, and I would only be looking for a Goldman trade if it broke back above the 20 and 50, consolidate a little bit, and then move higher on its next leg up. So this has a lot of work to do. I would stay away from looking at Goldman. And the banks as well. Banks really not looking so great here. There's a lot of work for the banks, which actually adds fuel to the fire of a deeper downside correction. And of course, when you throw with seasonal weakness to it, then you could see what I'm talking about. Apple here had a nice little move up and then gave back all of its gains, held this horizontal resistance area, but now clinging to the 20-day moving average. If we lose the 484, I actually, you know what? Let's call 484, 483.85. If we start to lose that area, look for a test of the 200-day moving average, and then we would reevaluate it. Okay, and last but not least would be the Qs. As you can see, Qs are kind of clinging by a thread here. All right, guys, that's pretty much it. A little bit long, but I wanted to get my point across with the dollar analysis and the currency markets. Have a great day. Be safe out there, and take it slow. This week is not something that you want to start legging into trades and putting on a bunch of positions. If you find a great day trade, take it. Let's wait for non-farm payrolls to come out because I think we're going to have a big September and a decent October as well. All right, guys, have a great day. We'll talk to you soon. Take care.